Good evening, everyone. This is Brian, and welcome to Copycat Trading. Today is Thursday, January the 18th, 2024, and this is your daily market brief, and it will be brief today. Well, we're looking at the S&P 500, and the S&P 500, after coming off of this trend line right here, this upsloping trend line, held that, and yesterday it bounced off of that. We saw pretty good in the late afternoon, and it did a definite follow through today with about 90 million shares. So it's definitely done well as far as the volume goes, and we're up 0.89% on the S&P 500. And we did a lot of meandering today. And there was a catalyst of the jobs report. We actually had some low jobless claims come in today, which sent the market up in pre-market hours. And then we just did some meandering in the beginning, came back down, almost filled the gap, just missed within just a few pennies, and then a rocket shipped up for the rest of the day. And it was overall a good day with lots of volume, or pretty moderate sized volume, and especially this last candle here with 7 million shares traded in this last 10-minute candle. So the spiders did, the S&P did very well today, and I still think that we have those all-time highs in view, which is about 480. And if that goes through, then we'll probably hit 5,000 on the S&P 500. This is the SPY, which tracks the S&P 500, and we'll probably hit the 5,000 mark on the S&P 500 if we break through these all-time highs here, and if we get up to 480. So just keep that in mind. If we roll back over for some reason, this is your line of support. If it breaks, then we'll probably have this support down here in the 50 MA, and that will keep us in the range that of support and resistance. On the QQQ, we have the same exact pattern as what happened today, except for the Qs popped up above their all-time high. So it briefly made an all-time high. So now I can take this little yellow line right here and move it up to here. That's the new all-time high on the QQQ. And then if it comes back down, you got a huge gap that it made this morning after gapping up. It had a meandering effect like the S&P did, but it actually went up a little bit higher. Let me mention something on the spiders, that we do have a negative divergence from the this high right here that was made on December 28th, and then now the high that was made on January the 12th. We definitely have a negative divergence going on. So if you can notice it's from here is about the December high, and then right here is the high that was made just a few days ago, and we're actually coming up to that high. So we'll see whether or not this pokes back up and gets us out of this negative divergence. If it does not, then the RSI is the only negative thing about this market and what we're looking at right now, and it is a negative divergence into resistance. So that could send the market down a little bit lower. All right, here is the IWM, and the IWM a few days ago broke that bearish pattern and came down and kissed the 50-day MA, and then has popped back up again today, and we'll look for a retrace to this level here. If it can get up to this level, retrace, and then recapture it, then that could be a bullish sign for the Russell. But if it doesn't, then if it acts like typical, it could hit this line and then roll back over and come back down again. And we'll talk about support and resistance whenever it gets past this point right here. As far as gold goes, gold had a moderate day, up 0.82%, and gold is doing well, but of course it's got to come back up to this neckline, and we'll see whether or not this neckline on this inverse head and shoulders plays out or not, or whether it gets rejected off of this. It very well could roll over and have one more dip in the precious metals before turning back up and making all-time highs. We'll just have to wait and see how the charts play out and how really the geopolitical things play out. As far as silver goes, silver had a up day today as well, up 0.89%, almost 1% on silver. And of course, I've told you that it's got this head and shoulders pattern. We got two patterns going on here. On the bigger pattern, you've got an inverse head and shoulders just like gold. And on the smaller pattern, the daily pattern, you have got a traditional head and shoulders pattern that sends it way down here to the 19 level. And if we get down to this level and we fulfill this pattern, then we get down a little bit lower, I'll probably be jumping on silver at that point. Natural gas, we had a pullback. We actually had the reports come out this morning about natural gas and how that it came down and actually had more in storage today than what they thought there was. There was a report that came out yesterday saying that households had used more natural gas than any other time in history. And so it was interesting to see whether or not we were going to have a report given to us that natural gas, the inventories were low, but they weren't. The inventories actually were kept up higher than what they actually intended for them to be. So it actually gave natural gas a drop today. And we came to that 618 retrace and we popped right through it. And almost all the way to the 7.5 retrace, and we also went past this line of support here. So there's no telling. The next line of support is the 786, and then also this line of support down here. So we'll see what happens. I'll be adding to my position down here if we get that low. I am right around in here right now as far as my average goes on natural gas. So we'll see what happens. Oil still stuck in this bearish triangle, this bearish wedge pattern, and we'll see what happens over the next few days, but it hasn't really moved. And you guys, I've talked about in previous videos of what my thoughts are on the oil chart. And if we do come down and take out this level right here, 64, then we could be setting up for a move down to 55, which would be great for my vehicle, but means not so good for the economy. It means the economy is in probably a recession at that point. Bitcoin has broke that bearish flag that we've been looking at over the last few days. It made that huge thrust downward. On the weekly, it has that big topping tail. And then during that, after that thrust downward, it made this bearish pattern. And then it broke that bearish pattern today. And its next level of support is right here at about 40,500. And then if it breaks that, then we're headed down to about 38,000. And if you're bullish on Bitcoin, then right in here is probably where you want to buy it for a short-term swing. But Bitcoin, if we dump out in the markets, Bitcoin will most likely go lower. If we rally up in the markets, excuse me, and the halving happens, then Bitcoin is at least going to get a small pop. But you can see that even with the good news, like the ETFs coming out, Bitcoin was not able to look, let's just say that it looks less than the luster that everybody has painted it as being. As far as the semiconductors had a big move today, and of course they're up to their all-time highs once again, and I will put a new line up there to their all-time highs. Nobody knows where this is going to stop. You can draw extension lines all day long. The only thing that I think might be good is maybe a mirrored pattern like I drew on one of the charts we'll get to here in a minute. But the mirrored pattern is about the best predictor about where these things are going to move before they have a pullback. But right now, you just don't want to get in the way of it. It is moving up quite a bit. It is definitely at its highs, and so you could draw in a parallel channel like this and maybe get a little bit of an indication of how much further it's got to go up on its run. But overall, there's no telling where the SMH is going to stop. As far as Apple had that move that I knew and was predicting last week, and then I got on board up here, moved my stop to break even, and I got stopped out 2 days ago. And boy, Apple really made a good move today. So it's probably looking for this gap as of right now. We'll just have to wait and see what happens, but it's got quite a bit of resistance in this area, 192.57 or so. We'll see whether or not it can get through there in the coming days or whether or not it stalls out. So if you've got a hold of Apple, if it was me, I would really be trailing the stop whenever I got to this level right here, because it's most likely going to have a pullback right there unless some news comes out. Evidently, there's been something said about the court case having to do with its watches and whether or not it can sell oxygen sensors on the back of its watches. And I'm not sure if the appellate court said that they can't sell it, or if it upheld the lower court's ruling, or what exactly happened. But whatever the case may be, it'll work it out. Apple will work it out, and they're not going to stop selling watches. They're just going to have to remove a sensor probably. And one way or the other, it'll either come up to this level and test it with our techniques, or it will actually come and pull back. And we'll just have to wait and see what happens with Apple. Tesla again looked weak today. Tesla's testing this support line running back all the way to April 27, 2023, and running up through these lows here. And so Apple is testing that, and we'll see what happens. If it gets through this line and it breaks this support level here, then we could see significant downside on, or at least sub 200 on Tesla into this support line, 194, 195. And I'll be adding to my position in Tesla right down here as well. But mine in Tesla is more of a long-term view of Tesla, but I don't do it like you would typically do it. I'm in and out, and so I don't. I buy support and I sell resistance. I don't hold on to something for years and years. So that's Tesla. And then NVIDIA. NVIDIA was another up day again today. It just seems like it always goes up. Not always, obviously. We had a down day yesterday, but seems like it just always goes up. And the finishing of that measured move is around 586. So we'll see whether or not it's looking for that measured move like what we had over here. Microsoft had that break after it break that flag. Boy, it is just rocketed up. And again, it's at all-time highs as well. So we'll see what happens with Microsoft over the coming days. Meta, it's got the same thing. Meta is looking for its all-time highs, and its all-time highs are right up there. You can see the yellow line, trend line right there, and the all-time highs right around 384. And so Meta is looking for that 384 as well. It's got it in its sights, and I'll be playing that on a short for a short term, depending on how it gets up there, when it gets up there. And then Netflix is just consolidating in this area. It's got a somewhat of a upsloping consolidation, which I don't like the looks of that. But it's looking for that consolidation pattern. We'll see whether or not it breaks out over the coming days. And it's got a long way to go till it gets to its all-time highs. But it's just consolidating right below this 618. And as soon as it gets enough power, as long as the market looks okay, it'll break up to its 7.5 and into this area here where it's got a lot of resistance at the 7.5 as well. Google is looking good. Nothing wrong with this chart, and its all-time highs are set up quite a bit, a lot further away than what some of the others are. But Google's got a chart that's got an uptrend on both the daily and the weekly. Nothing wrong with the chart. Just got to take out this high pivot here, and it will be off to the races just a little bit higher as well. All right, I think that is it for everybody. I don't think there's anything else I need to address at this time. So if you got anything additional that you'd like for me to cover in the daily briefs, just let me know and I'll cover them. Just put it down in the comments below and I will cover them. If you like the videos, go ahead and like them and subscribe. And if you would pass it around, it'll help my channel out. But otherwise, I'm going to go ahead and sign off. This is the Copycat Trader signing off for today, Thursday, January 18th. Have a great day, everybody.